Welcome, and looking at the S&P 500 here, and we're looking for wave 2 pullback into this area here. The normal thing for wave 2 is the 50-60% retracement level of the previous wave structure here, and that's sort of what we're looking at. But we're also mindful that not only with the S&P 500 at this 1650, which is a medium level here, we've also got the Dow Jones at 15,000 as well. So there are supporting numbers there for these markets. But look, this is the general picture on the weekly chart through here. So we'll stick with that, and we're looking for a 3-wave correction as wave 2. Wave 2 is normally sharp and swift, and pulling back to the 61.8%, which is really around the 1620, 1630 mark. As you can see here on this little circle here, the 1620 here and the 50% retracement level at the 1630. So it can certainly move down from that. So we were looking for wave 1, wave 2, 3, 4 and 5 up here for 1, then the A, the B and the C through here. This C wave here, look, it may not even pull back this far because there is a sort of completing structure within here, bringing it into this particular low here, and this is the same for the cash market as well. But what we do need to see in terms of not just the low being in place, but we want to see an impulse wave back to the upside there, an impulse wave being 5 waves. So just looking at the 4-hour chart here and looking at from wave 1 back to wave 2 here as an A and a B and a C wave through here, and we're counting 5 waves down actually from this point here, the 1, the 2, the 3, the 4 and the 5 here, and we're going to see the bounce off this area through here. But we're also bearing in mind that that 50-60% retracement level is a little bit lower through here. So let's just see it fall into place and form from that point there. So just on the 1-hour chart here, we're still looking for the 1, the 2, the 3 to here, the 4 to here, and the 5 down through to here. On the cash market, it looks complete already. So we could see a bounce in the next session. So in the next session, we want to see a 5-wave structure moving up, a little impulse wave. So we want to be seeing the 1, the 2, the 3, the 4 and the 5. If we get that, then we'll get the A, the B and the C, and at minimum then we'll know that we'll get another 5 waves up as such. But that's once we got this 5 here, then we can be assured of this. But what we don't know is this going to be an A wave, a B wave and a C wave, or are we going to have a larger picture to the upside with a larger 5-wave structure happening? And that's what we're expecting. So we're expecting another 5 up from this point here. So once we've got this 5 here, the first larger impulse wave of the larger fractal, then we'll see the A, the B and the C here of a larger picture, and then we'll be moving up from there. So once we've got this 5 here, then we know we'll get this 5, but beyond that we don't know that without confirmation. But we will know once this pattern in here forms, and like I mentioned, once we do have 5 here, then we'll know we're going to get we're going to be taking out these old highs up here. So it's just a matter of working through it. So just bear in mind, and this is the same with the US 30 as well. The 50-60% retracement level is already reached here, but we knew that the Dow was more bearish than the S&P 500, and once again we're looking for the A wave, the B wave and the C wave down here, and the C wave is always in 5 waves. There's a clearer count on the cash, but this is sort of it here, and this is why it's counted. So yeah, that wave 5 here of C of 2 can actually be in place right there. So, but still in trading terms, you'd want to be sitting on 15,100 through here. So we're guessing game, this is a possible low here, but we can't confirm it just yet. So let's see how we go with that. Pretty much the same for the European markets, but in their own way. On the 8-hour chart here for the FTSE, looking at the A wave, the B wave and the C wave, once again, it's possible that that we can have one more low into place through here before we see any sort of retest of this here. But if you're going to go along here, then you'll need 65 is 6500 is the medium level, so you'd want group 1, wouldn't you? You want 6530, so wherever that is through here, you want nice support on that. And then you would want it on the midpoint here as well. So we can have another low in here, but we may have the low here already. This will depend on the US markets as well moving. It does appear to be slightly sort of corrective. Yeah, I suppose you can get away with it. We'll see. Failing to find support on here, of course, will on the 6500. We'll obviously see this market make one more low here. We would call that wave 3, wave 4 and wave 5 here. So one more, if that is the case, then you want to be looking for a nice tested support on that level through here to move higher above here. Such the Australian market. I'll just go to the daily chart here for a second on the XJO cash market. So just the daily chart here. So this moved down through here. It was on lower volume than the previous day. So we've got lower volume here than the previous day. So, you know, it's not like totally sellers. The one of the things for this is the banks. So, you know, they're sort of creating the picture, the pattern. So what I want to point out here, this little wave up through here, which is just bringing this in here, and it'll mention it up this high area here. So this bar here, that 50, 82, 83 there, if that's breached by a move to the downside here as such, you know, and moving, you know, above this through here, then that actually creates the top in place there. Okay, so of course where we'll be seeing the market come back into the 5,000, the major trading level there, and that would sort of help us complete this 5-wave structure to the upside, which would be up for 1 here, an A and a B and a C back for 2 here, and then this is all the 3rd wave all the way up to here, and it counts as 1, 2, the 3, the 4 in here, and the 5 up to here. So that's the 3rd, the 4th, and then the 5th wave here. I was looking for another little high here in terms of seeing 5 waves here as such. But as I just mentioned, we can't have this wave 4 here coming back below into the price territory of wave 1 on the cash market. So just bear that in mind there. But so if it doesn't breach it, then we can still have one more high here, and then we'll roll over from that point, coming back into this area here, because after 5 waves we'll get a 3-wave counter trend. So keep an eye on that 50, 82, 83 on the cash. Alrighty, let's have a look at, just 1 second, sorry about that, on the CFD market here. So from this high here, you can see that I've got that as wave 3 here, but if that 50, 82 is breached on the cash, then I'd have to rework this wave count here, coming up here, as a completed 5-wave structure, which is not that difficult to do really, because we do have 5 waves to here, so that's fine. The A, B and C here, that's fine. But then we would have to make the 3rd wave, all of this here, this 3 here, all the 4 wave 3 here, wave 4, and then 1, 2, 3, 4, 5 for the top there. And as I mentioned, this area through here can't be breached. But in saying that, we're looking for, if I just point out through here, that's why I've got sort of 2 wave counts on here. But either way, there should be one more low into place through here. So we've got down for 1 or A, back for B or 2, and then we've got 1, 2 here, and we've got 1, 2, 3, 4, 5 for the 3rd. So we've got the 4th here, overlapping wave structures. So we should see a new low in here. But you know, all it needs to do is show us 5 waves down here into this area here. As long as it doesn't sort of breach this on the cash, then we can see this as being an A wave, a B wave, and a C wave here, and finishing and then moving up from there. But if it gives us 5 waves down, if this becomes if this breaches the 5082, 5083, then we call that wave 3. Then we'll see wave 4 come back and then wave 5. So that would give us 5 waves down from the high here and breaching that 5070, 5082 area. And those 5 waves there, once they're completed down here somewhere, then we'll get an A and a B and a C, and then we'll get another 5 down. So coming back over here, we'd be looking at if that's breached, if we get 5 waves down through here, it'll look something like that, down to the 50 or something, then we would be looking at a 3-wave counter trend here at minimum, and then we would be looking at another 5 waves down. So we would get that as a minimum thing, and it could get much bigger than this as well, but because we get 5 here, we'll get another 5 here, that much we know. So we'll need to have a look at what the UK and US markets are doing. Okay, let's have a look at the commodities. Okay, starting with gold. Gold's pretty much on track of what we've been expecting and counting and so forth. So as you can see here, we've got wave 1 up to here, wave 2 here, and we're looking for wave 3 to push higher. Wave 3 is normally longer than wave 1, so we can expect that at the 1400 here. The market needs to work through group 2, of course, but still, it still has higher ground to fall in place yet, so we're looking for that 5-wave structure there. So continue to hold long through there, and as you can see here, the 72, the group 2 here, the 65, 72 and the 80 was resistance, and now it's becoming support, so we'll expect that even higher up through here. But 1400 is a nice target to look to take profit at, and then wait for support. There will be swings within this area through here, so you'll need to look towards group 1 here and group 2 here as the trading range for this correction. But once it's completed and got support, tested support after a correction, then there's only 2 things that can really sort of happen, as we normally say, is the arrival, the reaction, then the first high above the level, then the A, the B and the C is the normal thing, and then support finding here, and then we normally move in through group 1. So that's one scenario. The other scenario is that it doesn't stop here, it just continues straight up, but the distance it goes up is normally the distance it comes back below this level here, and if that's the case, then it kind of works into this level here. It kind of like sound petering out, it moves into here, and then it's just a matter of looking at these lows here, these higher lows coming into place here as such, and then you can build in on these higher lows through here, and then the rest of the trade on top of the 14 once that's become tested support there and the volume is supporting that those stops there. Alrighty, well, copper is pretty much on the same track as well. As you know, we've been counting it for 5 waves to the upside here, and that's moving into place, as you can see here. So it's only natural to see a high come into place through here, and then have an A and a B and a C coming back through here. It may not come back this far. The other thing that I was thinking as well, because precious metals have still got thing to move up, this little move here that we've got here is in 5 waves here, but I was thinking that if the other market's going to push up, then this little 5th wave here, wave 5 of C here, may only be wave 1 here, then wave 2, then 3, 4 and 5, because of what's happening in gold. So we need to be a little bit mindful of that when we come back into this little section here. This is just on the 5-minute chart. You can really see those last 5 waves there, can't you? So the 1, the 2, the 3, the 4. 2's nice and sharp. If that's the case, then wave 4 will be sideways and complicated. Then we got 1, 2, 3, 4 and 5 in here to top that out there. The reason I was saying that this could just be wave 1 here and wave 2 here is because this move across here appears to be corrective. So when we look at that in a bit more sort of detail here, it just appears to be a corrective pattern because it's got overlapping wave structures. So it's highly likely that it can move up from that point there. And if that's going to be the case, then we're going to see the consolidation in US BHP here. If that's the case, then we'll see that push up from there. But if that does fold back as the top of wave 5 there in the copper, then we'll see this move back here as well, retesting the 6,500. So let's sort of see how we go there. And it's the same with the Australian BHP as well. With the Australian BHP, you can kind of see that we've got 5 waves up there already. So even though our target was 38, and it could still be the case, either way, we've got wave 1 here, and this is an expanded flat correction here, and then we've pretty much got wave 5 all the way up to here, even though it's not clear, it's just a bit of a guessing game on my behalf, and then wave 5 up through here. So either to here or up here, we're going to have a corrective pattern through there. As I mentioned before, the most important point from the levels moving up here, the Fibonacci numbers 1, 2, 3, 5 and 8, halfway between 5 and 8 is the 3650. So that's really the, and I mentioned this before, this is really going to be a central point here. So, it's okay if the market comes down back through it and retests it and so forth, but if it rejects it as such, becomes resistance, then you know that you've got your top into play. I know that that's a long way off of, what you may be doing in terms of risk and so forth, but I'm just explaining the pattern through here as such. Okay, so the oil market has still got further to go up as well. We're looking at this structure here, this 1, 2, 3, 4, 5 as wave 1, the ABC back for wave 2, and then working higher up into above here. All that's very well. However, it takes time, and if stock was on its side here, if the S&P 500 and oil were doing the same thing, then it would move quicker, but obviously it's not. So if we may have that low in the indices, so that could help out. The 105 is it's critical to stay in place. In fact, that low there would be the critical point in Elliott terms. After 105 is 108. 8's a profit-taking number. It's always the first even number before the next whole number, like 110. So it always sees selling and profit-taking occurring there. But the 50% between that, the little 65 level here, the 106.50, as mentioned before we arrived here, this market works well with that. That's the current support. So we could still see a more of a corrective pattern unfold here. We've had that sharp move down here, so we could see something like this before we see any sort of upside there. But it should come, and especially with the bounce off the 15,000 for the DJ and the 650 for the S&P 500. Okay, let's have a look at corn, and I've adjusted the wave count here a little bit. I don't know if it's sort of confirmed or correct or not, but this is one of the things about working with wave 4s. They're very, a little bit complicated, but this previous low we've had here, I've just calling that in as wave 3, but I'm calling this whole correction here wave 4. So an A and a B wave and a C wave that may not be complete yet, because I can see 5 waves into here, and that would be the 3rd there. So this can be the 4th. So we can still have a 5th wave up through to here before we see it roll over again. So this would be a like I said, an A and a B and a C wave in 5. C waves are always in 5 waves. Once that reaches there, then we'll see that roll back over into this point here. That's keeping this wave 4 quite simple, by the way. But that seems to be the pattern. We'll stay with that for a while. So look, essentially what we've been looking for from way back here was some type of swingy, complicated correction that would be trying to retest the major trading level here as such. And this is still not sort of complete as well, because I need to point out that once we get this wave 4 in here and we get a 5 wave sequence to the downside here, then we're going to get a larger wave 4, but this wave 4 should pull back to the wave 4 of 1 lesser degree, this guy here. So we've still got a long way to go through here. So the idea is really we don't trade wave 4s. If you do trade wave 4s, you either really need to give them a lot of space to work out. If you're trading wave 5 down, the other side of the coin is to move in much closer and trade the sub-levels there. But anyway, complicated one there. We'll try and add another commodity, another soft commodity to this section here, so we've got a bit more trading opportunities to play out. Alrighty, let's have a look at FX. Okay, the euro here. There's two trading sort of opportunities here. The first one is for further downside, and that would play out in terms of wave 1 to the downside here, and then we've got a little ABC for the A wave, the B wave down to here, and then the C wave in here is wave 2. And if that's the case, if we've got wave 1 down to here, and the A, the B and the C here for wave 2, then quite simply we would be looking for, obviously further movement down this side here is a wave 3, and wave 3 would be longer than wave 1 and it would be swifter. So what we would see something like this, a little A down for 1, back for 2 here, down for 3, some consolidation here for 4, and then we'd see an A, after we got 5 waves down, we would see an ABC coming back to retest the 133 here, and then we'd see a swifter move to the downside. So if that pans out, that's what you need to do, okay? On the flip side of things, I just want to be mindful of both sides, because here we could have, forget this wave 1 here for a moment, forget that for a moment. This move down through here in 5 waves could be wave A, this can be wave B here, and this can be wave C here, this could be wave 1 here, and this can be wave 2 here. But wave 2 here would have 3 waves down. It would be more so like, let me just get this drawing tool working here. So what we'd be looking from top of wave 1 here is we'd be looking for an A wave, a B wave, and a C wave here. So in one way or another, we really want to see if we can test below the 113 here, and then we want to move back up from that area there. So yeah, so look, it's kind of, we have to wait for this to unfold here, and we knew that. Yeah, look, you just have to wait, and the higher that you can buy this, better. But you do need to have that 3 wave price action there, and it could be this one here. It could be as simple as this one here as such, but a breach down here would be perfect. Or once we've got that this little high here that's in place, a move above that there, then you could go along from that point. So just sort of keep that in mind there. So we're looking for a setup either to go short here or long, basically over here. So we'll as we get closer to that, we'll nail that, because it still needs time to develop through here. But either way, it will move quite quickly once it's in place here. So yeah, look, and just feed orders in there, small orders in there, and then just start building them from that end. But the bias is for lower. A lower wave count here, but I'm very reluctant to short in 2 senses here. One is being above 1.3 here, which is a minor trading level, which is the top of group 1, and not only top of minor group 1, then we've got the top of subgroup 1 as well, so the 1, 2 and 3 here. So this is really finding support on top of subgroup 1. So minor group 1 and subgroup 1, they're bullish numbers that would go long off. So going short from them, is got to tread a bit lightly. And normally the safest shorting trade is that when you're in group 1 is to use the pivot, which is the number 2 here, 1, 2 and 3 here. So when the pivot is the retested resistance, then the market is attached to this particular number here, the closest largest number. But while it's above that, it's in more of a bullish stance as well. So you can see that my reluctance of going short, but there is an Elliott count to take it short, and we can't ignore that as well. So let's just allow the market to corner itself into this space here, but you need to allow it to mature. And if you're unsure, then really use much smaller positions and feed them in over a period of time, because there'll be plenty of time to the upside if that's the case. There'll be plenty of time to the downside if that's the case. So no need to rush in and create exposure for yourself unnecessarily. Okay, the Australian market. This is just the weekly chart here, and I just thought we'd start here. What we've been looking for is, the completion of this leg to the downside here, and doing our best to count that. We still don't think that it's finished. This wave 5 is finished. We still think that we're in a very tricky wave 4 situation here, and but at the same time we do need to be mindful that new low there can be this wave 5 here, and we can be completed totally in this sense here and pushing up for wave 5. So that's a possibility, but we just need to allow a few things to play out first. So let's just drill in here a little bit. So the corrective pattern that we're looking at is we've got wave 3 into here, yeah, and then we're looking for the A wave, the ABC for the B wave here, and then the C wave up through here. And the C wave will also be in 5 waves as well. So the 1, 2, 3, and this is the 4th, which is the A, the B, and the C for the 4th. And then we need to make a new high above here to make the 5th wave here. So the 1, 2, 3, 4, 5, and that's where we are now. Once that's completed there, then we'll see 5 waves down for this to complete down here, and that would be the end of the situation, and then would move up from there. But I'm also mindful that, as mentioned before, if we've got that count wrong, it's not a complicated 4th wave, and this is actually the 5th wave sitting in here, this new low here, well then what will happen is that we will have this 5-wave structure up through here, but when we come back here, we'll come back as an A and a B and a C, and that will be 5 waves, 3 waves and 5 waves, and then we'll move up from that point there. So in both counts for the time being, we will be seeing this move down. In both cases, we'll see this here. So we can track this particular situation here, new high here and an ABC here, but this may turn into a 3rd wave here, 4th and a 5th, or it will just go as an A and a B and a C and move from this point here. So this is our preferred count. Let's see how that sort of pans out. So in the meantime, we're still looking at this little 5-wave structure to the upside, and this is it here in terms of the 1, the 2, the 3, the A, the B, the C for the 4th, and up for the 5th there. It should make a new high above here. In trading terms, obviously you want the 92 as support there. It's just, we're going to just drill in here a little bit further. So at the moment, 92 is not the support. It's got the arrival, the reaction. This reaction could be finished, it may not, but when it does, we would still see, let's just say that it's done and dusted on the 72 here, and it moves up here, well then it will normally stay within group 1 here, the 1, 2 and 3 subgroup 1 here. Once we've got that first high here, that would be in a 5-wave structure as such. Once that's completed there, we would see some sort of A, B and C here as such. Once that's been done and dusted, then you can look for going long here, but we do need to see this. You do need to have that there. It needs to test supply up here. It needs to test demand here, and it should stay within group 2 here. And then obviously any breakout, any support on top of group 1 here, the 30, that will also give you the opportunity for the upside as well. But it's nice if it can test higher, find supply, come back and test demand, and then you build your trade in from that point on the 92 there. Alrighty, that's it. So thanks for listening, and good luck in the day ahead.